And you just mentioned that there, despite the fact that there are joint entities, but that might not fall with the definition of the joint ventures. Could you just a little bit explain what are the things?
All right. What I said is under IS 31, the moment you had a separate legal entity, the thing was a joint venture, and you either apply proportionate consolidation or equity accounting, whatever your accounting policy was. This standard says, wait a minute, before you jump to that conclusion, just wait. Is this actually a legal entity that is totally ring-fenced? Is it an entity? Or could it be looked at as like your branch? You understand it? Is it really genuinely an entity that can take external finance, has external customers? Or is it your branch or your arm? If it's your branch or your arm, it's joint operation, even though it is housed in a separate legal entity. You understand it? So what they're doing is, you're saying, wait a minute, before you jump to conclusions, just see whether this legal form or this legal veil here has any substance to it. You understand that? All right. Most of your extractive industry companies or joint ventures don't have any external operations. They are just acting as the other arm of that foreign company, and in that case, that won't be joint ventures, so they don't have to equity account for it. They will be putting in their proportionate share of assets and liabilities, as they would do. All right, so they, in a way, will still be achieving proportionate consolidation. So for them, there's no change. You get my point? So a lot of these extractive companies, these oil, gas companies, for them, these joint ventures that they're creating are not joint ventures. They're joint operations. And by them being joint operations, you still got to proportionately bring your assets and liabilities in. So
line by line.
Correct. Not a proportionate consolidation, but a line by line. Yes. Different. Yeah. Any other questions? Yeah, in front, please.
Yusuf, if you've got a situation where the private equity house is 45% shares and the other investors have 55% with some special investor programs, like you have the proxy rights usually attached to the SPAs of these PPMs, you might end up with the voting rights with investors who don't have to consolidate because all their money went through Cayman Island companies. So you have got 45%, somebody else has the voting rights. And once again, the escape route which we have been trying to cover for these private equity houses never went through.
Yeah, no, point taken. I think what's happening here is I think the standard setter tried to close a gap, but I think the gap's still there. I think there's still a structuring opportunity. But what they're trying to do is they're trying to close the gap. You understand? I mean, in that situation, you've got to see what's the relevant activities. If the contracts are written properly, you may find something. Who should be consolidated? You understand? But there's an analysis. You go through the process. Hopefully through that process, you're getting the right person to consolidate. But yes, there's still structuring opportunity. Unfortunately, reality.
I would like to ask one question about this, that regarding fair value. Like there's a government in university, and for that it has a huge, it has a good land over have it in its balance sheet. So if we going for a revaluation of it, right, for fair value model, investment property, if that is going to be shown as an investment property, so will that be a sufficient thing that it will be a reflective of reality that investment property will moving to a high amounts, and but the purpose of the government was as to be remain there for education purpose?
If I understand, let me repeat your question, and I'm hoping to see if I understand it correctly. You've got a piece of land, to value it on the highest best use, would that be feasible? Because it's not the current use. Is that what your question is?
No, like government has some responsibilities other than making profit.
Okay. If the government has put some conditions on the land, that conditions have to be taken into account in the valuation. Because if a third party has to take that land over, he will have to be subject to that same conditions. So if the government says, you can only use this land for industrial property, You cannot value it using residential. You understand it? Because that's a limitation. A market participant can't use it.